Hi, this is Zach with the Bulletin Board Heroes here at Vox Markets for Thursday, the 22nd of September. And we've still got that dance with the FTSE 100 either side of that 2-year uptrend line. You can see the rising trend channels there from the spring of 2020. And we're hoping, well, some of us are hoping that the market won't roll over, even though we've had multiple failures above 7,500 so far this year. In terms of what may happen, we've got a situation where the line there around 72.20. Either would really prefer end of day closes above that. Otherwise, there's the risk of either retesting 71.30, which was the initial September support, or even worse, going down to the floor of that March falling trend channel around 69.70. At the moment, all that really gets us out of jail would be an end of day close back above the 50-day moving average at 73.55. But obviously at the moment it would look easier to adopt a bearish rather than a bullish stance. But anyway, the support in recent months has come near to this line, come in near to this line, so we've seen that really from June onwards. So I suppose on the balance of probability, one would either stand aside or hope that there will be a rebound. Difficult, obviously, in the run-up to the latest mad interest rate hike from the Bank of England. Moving along to Bitcoin, and here we've got a market which is also slightly on the edge at the moment. Here we're just bumping along the bottom, post-July support there around 19,000, so that's basically where we are now. We break that, which there is a chance of doing so, then it's probably down towards the mid-teens in terms of 15,000, something like that. It does look as though, as I've said, looks as though we're in the equivalent position as we were at the end of April, having had a bull trap through the 50-day line and then falling away there. So if the technicals work, which they sometimes do, then we would roll over here as well. On to the stocks of the day, and it's not an easy day to find bullish situations, but Atlantic Lithium seems to be flying both on a fundamental and a technical perspective. It looks like we're in the run-up to a golden cross, so we have the cross down of the 50-day moving average through a rising 200-day line, the black line there. Now it looks as though we're about a week or two away from a golden cross. Run up to a golden cross, normally the strongest part of the cycle. Doesn't always work, but it didn't work in the case of the FTSE recently, but normally a good indicator. Just need to break recent resistance around 46 pence. After that, we're looking at obviously April highs around 67. Best case scenario target maybe by the end of the year up to 90 pence. So it does look rather strong there at Atlantic. On to a stock which I know has lots of fans and followers. I'm not sure that they'll be that happy at the moment, but at least we have bounced temporarily above the 200-day moving average there at 98 pence on Avacta. End of day close above the 50-day moving average would give us more joy in terms of a potential move back towards the top of the recent range up to 140, but at least for the time being, that 200-day line is held. It's basically held since June, and if the fundamentals are what they're supposed to be, then one would hope that this would be a support point and there would be a rebound from current levels. On to a stock which, from memory, has had good update of late. Here we've got Boku, which has bounced off the floor of that falling wedge around the upper 70s area. Unfilled gap to the upside, which is very encouraging. We've broken above the high of the gap day, which was at 88 pence and above 88 pence, looking not only to break this line of resistance from November last year, but head up towards the £1.20 area, which is roughly where the 200-day moving average is now, and the top of a broadening triangle from back in May. This stage only well below the top of the gap there at 82 pence really cancels the upside scenario, but unfilled gap to the bear trap unfilled gap to the upside is a very strong, normally a very strong signal, and let's see if it works even in current markets. Moving along to the pub, City Pub, and here we also had an unfilled gap to the upside, a bear trap gap reversal. We've broken yesterday's high, the gap up day, which was the high there, 58.5 above that. Looking for at least the 50-day moving average at 66, and the best case scenario target maybe back towards the resistance on the way down and the old April support around 75 pence over the next 2 to 4 weeks. But a nice turnaround there. Looks as though something is happening, or at least the bears are being caught out. Moving on to Dekel, which had an announcement today. Here we've got, well, we had that overshoot to the downside below 2.9 pence. We've managed to find support there on a consistent basis now. So the dance either side of the 50-day moving average also helping, and gap to the upside today. So really assuming here that above 2.9 pence will eventually make it up to the 4 pence area, which is the top of, or the bottom of the gap down that we had back in May, and also the area of the 200-day moving average. Time frame on that hopefully as soon as the end of next month. On to Egdon, which has had a lot of coverage here of late. Here we've had a gap to the upside earlier this week and held a gap, which is encouraging, around 6.17 or 6.2 pence, let's call it, above that. Looking for a retest of September resistance towards 9.5 pence, hopefully over the next 4 to 6 weeks, or maybe even sooner. Encouraging situation here at GreenX, which I don't think many people are talking about. Here we've had unfilled gap to the upside. We broke the gap higher day, which was around 13.9 pence and above 13.9. We're looking for not only a retest of last month's resistance at 16 pence, but up to 20 pence at the top of the broadening triangle from the beginning of this year. Hopefully we can get up to 20 pence by the end of next month. On to a stock which is presenting in Mayfair. I'll be hosting an event for them, LifeSafe. And here we see the shares just bouncing along the bottom here. Came to the market at 75 pence, so even though the fundamentals seem to be rather good in terms of sales for the fire safety group, the shares are still trying to consolidate. Let's see if after the presentation next Tuesday they do any better. The recent high is up to 55, so above the 40 pence area, looking for a potential rebound back to the mid-50s. Given that the shares are very oversold, the RSI there are under 10, so that takes it's very rare to see an RSI so low. So at least on a technical basis, we are near or at the lows. Stock which is rehabilitating itself slowly at the moment is Okyo Pharma. Here we've broken that resistance line there in the falling trend channel from the beginning of the year, and the view is that above 3 3/4 pence we should be able to get back up to the 6 pence area, maybe by the end of next month, off the back of the bullish divergence, rising 50-day moving average, and an overall U-shaped recovery on the daily chart. So let's see if Okyo will step up to the plate. Moving on to Otaq, or Otaq. Here we've got a situation where we've got another U-shaped reversal, which is encouraging. We've got bullish divergence leading into that into September. Above the 50-day line at 8.3 pence, looking for the shares to not only break that resistance line there from February at current levels, but also head up to 33 pence maybe by the end of the year. But a nice broadening triangle signal there, or pattern there, and we've got the bullish divergence signal on a technical basis. Back to finish with Woodbois, which has obviously peaked out at 9 pence back in May and come right back. The old low there from January, around 3 3/4 pence. We had a brief bear trap. We've got a V-shaped bull flag now, if I can spit it out. Looking for an end of day close above the 50-day moving average at 4.2 pence to then lead us back to 6 pence, perhaps by the end of next month. On the basis we've got a higher low here and a bear trap aftermath. That's it from me today. More updates tomorrow.